Hey guys, welcome back to the channel. Today I'm gonna share with you gold analysis. From the analysis that I shared during the previous times, we can see that when the price was at 2400, reached all of our targets close to the top of the pattern. So if we are going to look at the price right now, is consolidating here, and in 30 minutes we have the US CPI data. All the focus of the market was only on this indicator today. Consumer price index ex food and energy on a yearly basis is expected to come in at 3.2% from 3.3%. On a monthly basis, 0.2% from 0.1%, so probably this could be a seasonality reason. Consumer price index on a yearly basis for July is expected not to change, and a slight increase on a monthly basis. So overall, if the CPI data will come in lower than expected, that would be great, and it will create a weaker USD, and it will support more the idea that the US economy is doing well and probably the Fed may cut rates on September meeting. So all the market is speculating about this data today, and given to the numbers, the market will speculate related to the topic how much the Fed will cut rates. However, we must be very careful at this moment. If we are going to look at the bigger picture, the market is pushing the price up to the top, and it looks very interesting. Despite that we have this triangle pattern, it looks like the price may break higher, and we have to be careful. However, it is not about the interest rate data, everything. It doesn't mean that the Fed will cut rates and gold should only rise from this point. Yesterday we had also the PPI data, and they didn't show anything, so they are showing that we have higher chances for the CPI data to decrease this time. But yesterday we saw this bearish move happening after the news increased and it moved down again. So despite the fact that it looks like we have a bullish pattern, we must be very careful. We can interpret this in two different ways. We may be in this type of bullish pattern, and the market can push the price up before it moves down again. So the first scenario that we can be is that we can see any breakout from this area, it can invalidate everything and later it can move down. However, we can also be in another possible scenario that I'm looking at. Probably the price is creating any type of double top pattern, a small double top pattern, and it makes sense because the pattern is still valid here, and at the moment that everyone will anticipate the bullish move, then it can dump easily from the top of the zone. So this is what I'm looking at for gold during ahead of the CPI data. If it moves down, the bigger target that I'm looking at for gold is going to be the base of this pattern. This is down to this zone here, 2400 makes sense, a round number. This is the mass that I'm looking at, this one. And if the price will extend the decline, this area here. For middle term target, also this zone here in the middle where we had previous structure, it makes sense that we should have any target. So this is what I'm looking at for gold today after the news. However, it is better to wait and see what the market will bring for us, because it is going to be a very volatile and risky day, and that is why it is required to wait. But so far it looks good, and the chances are that we may have this small double top pattern before the price will begin the bearish move again. The only thing that probably can push gold even higher can be any news related to the war that we are actually experiencing, the new war that may begin between Israel and Iran. I hope that it will never begin. But this is the only reason that can push the gold up. However, we have to be careful from any sell-off again. So all the scenarios are very conservative on the bullish movement that I'm looking at. So let's see what the US CPI data will bring for us today. This is the trading scenario that I'm looking at on a 4-hour time frame. However, we must be very careful. I hope you guys enjoyed the analysis. Thanks for watching. Please don't forget to hit the like button and follow. Bye bye.